In this video, we're going to go over the reason that you're probably struggling with ICT concepts. And number one is basically the fact that you just haven't been doing this long enough. You've not been doing it long enough to develop the discretion that the concepts require. And what do I mean by that? There's some things that nothing other than experience can really show you. You can't say that every order block is going to be respected. That's where the experience comes in. Number two, the reason is because you just don't trust the model yet. And that goes back to time. And it's precisely the reason that you must journal. If you're not trusting the model, it's because you haven't seen it enough, to put it very plainly. And you may have been trying the model live plenty of times, but that's not what it means to trust the model. Because if you truly trusted the model, you would quit closing your trades too early and either let it hit your stop or close the trade when it's really called for it. The fact that you don't trust the model just shows that you're inexperienced. That's why you must journal. The reason you journal is to document that experience. You need to be able to remember what you need to remember, because otherwise, the way your brain is journaling in your mind with these trades, it's not going to cut it. You need to put it on paper or on the computer. Number three, and I believe that this is the most important one, is the fact that you have to submit that there is an algorithm. And when the algorithm is not acting how the algorithm should, it's manual intervention. But you have to get it out of your mind that it's buying and selling pressure, because it clearly is not. Clearly. Before you can learn to trust these concepts and setups and models, is you have to submit that there is an algorithm. If there wasn't an algorithm, then why would time matter? Ask yourself that. Why would time matter? And you may say, because that's when everybody starts trading. That's whenever the volatility comes in. I'll give you a little study that you could try. Pull up volume. Pay attention to volume and notice when there is a huge influx of volume. Notice, does price move when that volume comes in? And then also, is there other times where you notice that price is moving a lot, but it's not, reciprocating that in the volume profile? Okay? And then number four is you need to do a study on the retail concepts, not ICT concepts, retail concepts, and prove to yourself, document it, why they don't work. You need to document where and why they fail. And I almost guarantee that every time you see a retail concept that failed, you can turn it on its head and the ICT concepts will prevail in those circumstances, such as equal lows being a turtle soup. But then number five is something that you cannot get is experience. And everyone requires a different amount of experience, because everybody's experience is not equal. Like one person's hour of studying charts is not equal to your hour studying charts. And there's sometimes that the hours are going to be more effective in your learning than others. And when you notice that you're not really taking in what's being shown to you, you need to step away from the charts and come back whenever you're refreshed and you can actually absorb the information. You need to be excited to absorb the information. You don't want to overdo it to the point where you're tired of it. Number six, you could label every fair value gap and or order block, and you will see that they will fail. But the reason is because once you submit to the fact that there is an algorithm, then and only then will you understand the importance of time before price. This goes back to saying that you have to submit, you have to drop all your preconceived notions that price is moving because of buying or selling pressure. These concepts won't work until you get yourself to submit to that. And if price was moving because of buying and selling pressure, then why would these concepts work? Why would a breaker cause price to respect it so well that enough buyers could come in there and push it above the breaker? Why is that? It's because it's on an algorithm. And why do you wait for certain times of the day before you trade? It's because it's on an algorithm. Then number 7 is there's times when we will expect a fair value gap to be traded to, but not filled. And why? That goes into narrative that comes with experience. The reason that sometimes, I don't know, you'll notice with the 2022 model, is there's times when the fair value gaps don't get traded to, or they don't get completely filled. And I'll go into that in the charts here in just a minute. But that is narrative, is knowing when to expect those to be filled and when not to expect them to be filled. And during those times, you either need to sit on your hands or you use a different PD array to do what you need to do. So earlier on the video that I posted, you'll see that I entered on a breaker. But also, if we look on the 5-minute chart, so here on the 5-minute chart, we see that there was a run above this high. It happened at 9:55. If you trust the model, you do not enter at this time. You enter at 10 o'clock or near or later. But also, it created a fair value gap. Now, why would that fair value gap not get filled? Now, to me, this is narrative. And the reason that I didn't expect it to get filled was because once we had this displacement, what's happening here is price is trying to get people long up here, and it's trying to stop out people before the real move occurs, right? We all know that. So once it gets these people trapped up here, whether they're a breakout trader or it hits their stop loss, either one, they're having to buy at an expensive price, okay? And if they're not using a stop loss, it's even better. So the market yanks these people down and it creates this fair value gap. And the reason that it won't be filled is because we don't want to allow these traders up here to exit their positions. So the market is going to cause as much pain as it possibly can to make sure that these people can't get out of their positions until they're, margin called or whatever. That's narrative. And then you combine narrative with bias. This was Friday. We've been expanding higher all week. I didn't want to see that. But being that it's Friday, I expected a run on the people who are profitable through the week. So I was aiming for sell side. Now, during these instances where price is just running off without you and there's a fair value gap that you expect not to be filled, what I saw was a breaker, which is the way that I use the silver bullet model. I like a breaker better. I trust it more. I don't know why, but that's just personal preference. You could use a fair value gap, you could use a breaker, you could use an order block, but this is the way that I enter the trade, because we had a high, a low, and a higher high. And then we saw displacement. After this higher high was a stop run where the fair value gap did not get filled. Okay, so that's why I entered on a breaker. And you'll see that I didn't hold for the full pull was because I was having to sit throughout this almost sideways action, and it just sort of frustrated me, so I closed the trade. And I'll give you another reason that I was bearish. It's because we had these equal lows right here, where retail would want to see support to buy from here. And as you can see, when we trade through those lows, price cuts through them like a hot knife through butter. there's not much trading in this area. It's not allowing people to get in the move, and it's quickly wanting to stop these people out. That's why we saw this displacement. We had these lows, yes, but these lows just looked more enticing to me. These were a good first target. I didn't even hold for them. I got out somewhere up in here. I can't remember where exactly, but I had 2 contracts on, and I closed one at a partial, and then I moved my stop to break even. And if you try and say that this is hindsight, I have it recorded live. I want to say another thing is, say you were on the 5-minute chart and you've seen this fair value gap, but you didn't know that it wouldn't get filled, okay? I remember what I used to do when I was afraid that it wouldn't get filled is I would start entering somewhere down through here, and then as price came back to return to the breaker, it would make me nervous and it would hit my stop loss, or I would just close the trade altogether. But you cannot enter as price is running down like this. You have to wait for a retracement. You have to wait for that, because the more that you enter on these prices down here, it's more in a discount if you're trying to reach for sell side. You don't want to get a discount price. You want a premium price if you're short on a trade. So you don't want to be buying when it's oversold, okay? You want to be buying whenever it's returning back into the breaker, which goes back to say why I knew that we wouldn't fill this. Well, I didn't know, but I was confident that we wouldn't fill this fair value gap. And the reason is because of narrative. And this is what I mean by it just takes time. There's certain things that you're just not gonna know. They can't be logically explained through words. This is where you get people that argue, oh, you could label every candle a rotor block or a bearish order block or a fair value gap, then it'll all get traded to. And yeah, that's true. The reason is because it's on an algorithm. That's why time is so important. You know, it goes back to what I was saying earlier, is you wouldn't trade an order block in the Asian range, or I wouldn't. It's so low probability. There's not much volatility. Price is really just chopping around, building up liquidity, waiting for the London session to start attacking liquidity. And all the people that were entered in the Asian range are going to get stopped out, because there's usually a whiplash scenario where price goes down, it takes out the lows, and then it goes up and takes out the highs, or vice versa, before it starts the real move in London. So, you know, this just all goes back to narrative, and it's just, it can't be explained very easily. And to wrap this up, basically, before you go out and say that these concepts don't work, or they're just another form of retail concepts, they're really not. You need to submit to time. I'm proof that they work, and I'm proof that what he has taught can be absorbed. It really, truly does work. So if you're looking for somebody to tell you whether to listen to the concepts or not, I'm telling you right now that I've went through a lot of different strategies, and his were the only ones that held water. Why people say that it's like a cult? It's because there's nothing else like it. Everything else just, you can't be sure on. But with these concepts, and you combine it with bias and narrative and P arrays and liquidity and attaching liquidity, it's so precise. It just doesn't get any more precise than this, unless we literally knew the exact algorithm. But until I talk to you next time, see ya.